So good afternoon to all the students. We are back again with FM revisionary lectures. In the last revisionary LVC, we started with investment decisions and we quickly revised about the different capital budgeting techniques. We also revised about other concepts that are covered under investment decisions that includes capital rationing as well. And we also started with few practical problems. So in today's session, let's try and solve some other practical problems from the module, from examination papers, from MTPs, from RTPs. We'll try to cover to the maximum extent possible. Okay? So let me share my screen with you all. So to start with, let's start with question number 4 of module. Practical problem, question number 4 from your module. Everyone with me? Can we start now? Elite Cooker Company is evaluating 3 investment situations. So there are 3 investment options available with the company. Number 1, producing a new line of aluminum skillets. Second is expansion the existing cooker line. And third is to develop a new high quality line of cookers. So these are the 3 investment projects that company is contemplating. If only the project in question is undertaken, the expected present value and the amount of investment required are as follows. So if only project 1 is taken, then my investment would be 2 lakh. And friends, see here they have provided us the present value of future cash flows. They have directly given PVCI. In all the other questions, they used to provide us just the amount of cash flows. But here, they have directly calculated the present value itself. So please focus on that thing. Okay? Students generally do mistake over here. They discount these cash flows even though present value is already given. If project 2 is taken, then amount of investment is 1,15,000 and PVCI is 185. And similarly, 270 of investment for project 3 and 4 lakh of PVCI. Now, friends, this is very important part of this question. If projects 1 and 2 are jointly taken, so now you have to visualize that let's take both the projects together, project 1 and together. There will be no economies. By the word economy, it means benefit. There would not be any benefit or additional savings if project 1 and 2 are jointly taken. Okay? The investment required and present value will simply be the sum. Means if project 1 and 2 are taken, then my investment required would be 2 lakh plus 1 lakh 15. So 3 lakh 15 would be my investment amount, and my PVCI, present value of cash inflow, would just be the sum of these two, 290 and 185. Okay, understood? With projects 1 and 3, now you have to visualize if 1 and 3 are together taken. Economies means additional savings is possible, but additional savings are possible only in investment. See, can you read the third line? It is possible in investment because one of the machines acquired can be used in both the production process. Okay, so one of the machine will do the work of both the projects. Okay, so the total investment required for project 1 and 3 combined is 430. See, as of now, you see it is 2 lakh plus 270. If individual project 1 and if individual project 3 are taken, then your investment amount required would be 2 lakh plus 270. But if jointly they are taken, then my investment would be just 4 lakh 40,000. Okay? Because there is economy, there is additional savings, and additional savings is in investment. If projects 2 and 3 are taken, then again there would be economies. And there would be economies in marketing and producing the products, but not in investment. Okay? So they are saying if project 2 and project 3 are taken, then economies would not be in investment amount, but it would be in PVCI. It would be in PVCI. See, next line they have written. The expected present value of future cash flow for project 2 and 3 is 620. Had the project 2 and project 3 individually been taken, then can you see my PVCI would be 4 lakh plus 185. But since they have been jointly taken, there are certain savings in cost of marketing and in cost of producing the products. So my PVCI, if both the projects are taken together, is 6 lakh 20 instead of 585. Hope you are understanding the question. See, the solution is very simple for this question, but understanding of the question is little complicated. If all the three projects are taken simultaneously, again, the economies noted above will still hold. Now we have to visualize if all the three projects are taken together, then the question says that the additional savings will still hold. Means there was additional savings in investment when project 1 and 3 was taken together, and there was additional savings in cost when project 2 and 3 was taken together. So the question says that would still hold. Okay, when all the three projects are simultaneously taken. However, 1,25,000 extension on plant would be necessary as space is not available for all the three projects. So when all the three projects are undertaken, you have to pay additional space rent ka cost, which is 125. Calculate NPV of all the projects and state which project should be chosen. So ideally, can I say there are many alternatives available. Alternative number one. When only project 1 is taken, we have to calculate NPV. When only project 2 is individually taken, we have to calculate NPV. When project 3 is only taken, then we will calculate NPV. When project 1 and 2 are together taken, then we will calculate NPV. Likewise, when project 2 and 3 are together taken, again we will calculate NPV. Project 1 and 3 are together taken, we will calculate NPV. And all the projects are together taken, 1, 2 and 3. Then we will calculate NPV and we will see which alternative or which projects generates the highest NPV. Students, are you following? हमें इस क्वेश्चन में करना क्या है? What is the approach of this question? बोलो, any queries still here? Any doubts? So can I say NPV is nothing but PVCI less PVCO? Yes or no? NPV is nothing but PVCI less PVCO. So let's calculate NPV for all the alternatives. So when only project 1 is taken in the question, when only project 1 is undertaken, can I say my NPV would be 2,90,000 minus 2 lakh? Yes or no? PVCI. See friends, again I am repeating, they have directly given the present value of cash inflows. They have not given just the cash inflows figure. Students generally do error over here if discounting rate is given. They discount this present value further. So it is wrong. They have directly given the PVCI, present value figure. So please read the question very carefully. So 290 is my PVCI and my investment required is 2 lakh. Correct? So can I say if I take only project 1, my NPV would be 90,000. Simple. Similarly, likewise, we will calculate for project 2 and project 3. Let's calculate for project 2. Project 2 115 and project 3 185. Project 2 115. Sorry, it is PVC. Out investment amount is 115. 185. Present value of cash inflows is, oh, it is 270 for project 3. 185 is PVCI of project 2. This is 270. And 4 lakh is PVCI for project 1. 290 and 2 lakh. So NPV is 90,000. Project 2, 185 and 115. And project 3, 4 lakh and 270. So 130 is NPV. For project 3, and for project 2 it is 70,000. Okay, any doubts still here, friends? Do you have any queries still here? Now if project 1 and 2 are taken together, let's see if there is any economies or not. So question says if project 1 and 2 are jointly undertaken, there will not be any additional benefits. There will not be any additional economies or savings. It is the investment amount will be just the sum of both the projects. So my investment amount here it would be 2 lakh plus 115. Are you getting this? 2 lakh plus 115, 315. My investment amount would be just sum of it would be just the sum of both the projects. Similarly, PVCI would again be just the sum of both the projects. So can I say my PVCI is 290 for project A and 185 for project B. So it comes to 475. Yes or no? So my NPV, if project 1 and project 2 are simultaneously taken or together taken, is 160. Bolo, any doubts still here? Online participants, any doubts? If project 1 and 2 are together taken, can I move forward? Now if project 1 and 3 are together taken. So when project 1 and 3 are taken together, question says that there would be additional savings, but additional savings would be in the investment part and not in PVCI. Okay? So when projects 1 and C are together taken, they have mentioned that my investment amount would be 440. So can I say my PVCO is 440? Now what about PVCI? Tell me. What about PVCI? Is there any additional economies if in PVCI if project 1 and 3 are taken together? No. So if there is no economies, then you have to simply sum up the PVCI of both the projects. So can I say if 1 and 3, project 1 and 3 is taken together, my PVCI would be 290 plus 4 lakh. Yes or no? 290 plus 4 lakh if project 1 and 3 are taken together. So it would be 690 because there is no economies, no additional savings in PVCI if project 1 and 3 are taken together. So when I say it comes to 250, yes, correct. Kiran is correct. Now if project 2 and 3 are taken together, so again there are economies, but now there are economies in PVCI. Additional savings is in PVCI when 2 and 3 projects are taken together. So can I say the PVCI is given 620 when project 2 and 3 are taken together? Now they have mentioned nothing about investment. So in other words, when project 2 and 3 are taken together, there would not be any savings in investment amount. So it would simply be the sum of 2 and 3 projects ka investment cost. In other words, it is nothing but 115 plus 270, which comes to 385. So my NPV comes to 235. Sir, previous slide PVCI is 475. Yes, it is 475. And 315 is PVCO. Any doubts? 475 is correct. Let me save this. Okay. Now, very crucial. When all the projects are taken together, project 1, 2, and 3. Okay. The question says that economies above will still hold. So can I say economies? Now let's just target PVCO first. When was economies available? Can I say economies was available in investment when project 1 and 3 was taken together? Yes or no? Yes or no? Yes, I will try to use Hindi, but more or less it would be in English. Yeah, more or less it would be in English. Now we are visualizing when all the three projects are taken together. So question says when all the projects are taken together, economies means additional savings would still hold. So additional savings, can I say when project 1 and 3 was taken together, there was additional savings in investment? Yes or no? Correct. So my when 1 and 3 was taken together, can I say my investment was 440? Correct. When 1 and 3 was taken together. Correct. There was economies in investment. So I just here need to add the investment cost of project 2, which is how much? 115. Are you getting this? Why I have not simply added investment of all the three projects? Why I have not just simply added 2,115 and 270? Because question says that when all the projects are taken together, additional savings in cost, in investment amount will still be hold true. Understood? So when project 1 and 3 is taken, can I say my cost instead of 470, there would be some benefit because project 1 and 3 are taken combined, then 440 is the only investment amount. So I have taken 440 and I have added cost of project 2, which is 115. Bolo, any queries over here in PVCO? Any queries in this part, in PVCO part? Any queries? I am waiting for your response. Can I move to PVCI now when all the three projects are taken together? Okay, no response. I will move forward. Now see, again, When projects 1, 2 and 3 are taken together, there will be economies in PVCI as well. Why? Because project 2 and 3 generates combined PVCI of 620. Generates combined PVCI of 620. Are you getting this? So when project 2 and 3 are taken together, my PVCI is 620. So can I say now with this 620, I have to just add PVCI of project 1, which is 290. Are you following, friends? Are you following? Understanding this part is very important. Understanding this part is very important. And in addition to this, there is 1,25,000 rent expense that is incurring when 3 projects are taken together. Plant expense. Yes, I was about to write that. So my PVCI when project 1, 2 and 3 are taken together comes to 620 plus 290, which comes to 9,10,000. And my PVCO comes to 440 plus 115 plus 125, 680. So NPV, if all the projects are taken together, comes to 2,30,000. So which project or which combination generates highest NPV? See, 90, 70, 130, 160, 250, project 1 and 3. So this combination generates highest NPV. So we should take project 1 and 3 together. Yes, correct. Kiran is correct. Followed, everyone? This question is very, very simple. You just need to understand what is asked in the question. Rest, the solution is very simple. Understood? Any queries? 1 and 3. Yes. So, advice. Company should go for project 1 and 3 together. Huh? Company should go for project 1 and 3 together. Can we move to next question now? बोलो इसमें कोई डाउट है किसी को? Question was very simple. You just need to carefully understand the facts given in the question. Difficult to understand. What is it is difficult to understand? Question की solution. कोई नहीं. Let's move to, I guess question 5 was done in last revisionary lecture, so we will not solve it again. Let's move to question 6. Yes, to understand it is difficult, but once you understand the facts clearly, then solution is quite simple. Nothing to be worried about. So let's move to question number 6 of our module. ABC Limited is planning to invest in machinery for which it has to make a choice between two identical machines in terms of capacity X and Y. So company has to choose between two machines, machine X and machine Y. So this is a mutually exclusive type question. Mutually exclusive decision making involves evaluation of different projects or different machines and selecting the best one. That are mutually exclusive. Means you select one, it means reject the others. This is what mutually exclusive means. Select one, reject the others. Plant expansion cost. Why I added? Because if all the 3 projects are taken together, then 1,25,000 would additionally be incurred. Would additionally has to be incurred by the company, because to take all the 3 projects together, company needs additional space, and for that they have to incur 1,25,000 ka cost. So that's why I have to take it under outflow. Okay? It is specifically mentioned that if all the 3 projects are taken together, then 125,000 of extension on plant will be necessary for all the three projects. Okay? So that's why I've taken it as outflow. So we were in question number 6. So this is a mutually exclusive type question, means selecting the one means rejecting of others. Now, in this question, if you look carefully, they have not given any information or any facts on cash inflows, on inflows that machine X or machine Y would be generating. Are you getting this? This is the first task that you need to identify in the question, that nowhere in the question they have mentioned anything about inflows, sales, variable cost, anything about inflows, anything about income. So our analysis or our decision making would in this question be based on the outflow, would be based on PVCO. Are you getting, friends? Illustration 6. Nowhere in the question anything is mentioned on cash inflow part. So our comparison would be based on comparing PVCO of machine X with PVCO of machine Y. Are you getting this? So actually NPV, as far as NPV comparison is concerned, we used to select the highest, we used to select that project which generates highest NPV. But in this question, we would select that machine which generates lower PVCO. Why? Because we are comparing the cost and not the net present value. So we will select that machine which generates the lowest PVCO. Understood? So first thing to understand in this question is that nowhere in the question they have mentioned anything about the cash inflows generated by this machine. Okay? So our comparison would be based purely on PVCO, and we will select that machine which generates lowest PVCO. Now, second, if you look carefully again in the question, the life of both the machine is different. याद करो, जब life different होती है, to solve the problem, we have two methods. Either use replacement chain method or we use equivalent annualized criteria method. This we have studied in regular LVCs. When life of both the projects is different, to make the projects comparable, see, as of now they are uncomparable because life is different. एक आदमी 60 साल का है and एक बच्चा है 10 साल का. Can I say it cannot be compared? To make it comparable, we need to bring the life at par. So we have two different methods. One is replacement chain method. One is equivalent annualized criteria method. We use this method to make both the projects comparable. Are you getting this? Yes or no? So, and the most preferred method, we have also studied that the most preferred method or the quickest way to get the solution when life is unequal is equivalent annualized criteria method. Correct? So now how to calculate? What is equivalent? Formula of equivalent annualized criteria method. Can I say the formula was nothing but NPV divided by PVAF factor? Yes or no? Divided by PVAF, this was the formula. PVAF is present value annuity factor, not the discounting factor. The annuity factor. Cumulation of all the discounting factor is annuity factor. Okay, this was the formula. But in this case, since cash inflows are not given, so we will use PVCO instead of PVCF or NPV. Are you getting this? We will not be able to calculate NPV. Why? Because cash inflows data is not given. So no worries, we will take the data, take the facts that is available in the question, which is PVCO. So can I say under this question, equivalent annualized criteria, would be PVCO divided by PVAF. Any doubts still here? Are you following the approach to solve, to attempt this question? That clarity you must have, how to proceed, how to approach, or how to attempt the question. Bolo, any doubts still here? Anyone? Any queries? Okay, no response. Then I will move forward. So now let's calculate equivalent annualized criteria for machine A. For machine A, equivalent annualized criteria for machine not A but X. It will be confusing to which method to use. See, if you want to use replacement chain method, then you need to first calculate or find out the LCM between the two. Here the LCM would be 6. The common multiple between the two is 6. So it means you have to take the project of machine X 2 more times. Are you getting this? And you have to take the project of machine Y 3 times to make it comparable. So in that case, we always use equivalent annualized criteria because replacement chain method is very lengthy process. Here the life is 3 and 2. What if 7 and 11 would have been given in the question? Then the common multiple would be 77. Common life would be 77 years. Are you getting this? So that is very lengthy and time consuming. Instead of replacement chain method, we always use quickest method, which is equivalent annualized criteria. Okay? The formula is PVCO upon PVAF. So let's calculate PVCO. PVCO would be running cost per year. Yes or no? Yes or no? Multiply by. We will discount this running cost, which is 4 lakh per year. Correct? Is everyone following? Machine X has running cost of 4 lakhs per year. So we will discount that. What is the discounting rate? 9%. So we will discount it with 9%. This is the running cost. कितना आ रहा है डिस्काउंटिंग करने के बाद? How much is my running cost का present value total? How much it comes? It can be anything, not just depreciation. It can be anything. All the overheads. You have to include all the overheads over here. कितना आ रहा है? What is the present value of running cost? ये करो ना calculate please. It is simple discounting that you have to do. कितना टाइम जा रहा है? Friends, please calculate the present value of running cost. Ten 1 to 400. 10 1 to 400. This is present value of running cost. This is not my PVCO. Huh? This is my present value of running cost. Present value of running cost. To this present value, we will add initial investment of machine X, which is 15 lakh. Correct? Plus initial investment in machine X is how much? 15 lakhs. So can I say my total PVCO comes to 25, 1 to 400. This is my PVCO of machine X. Did everyone follow this? 4 lakh is just the running cost, but I have to spend the equipment cost as well. I need to spend on the initial investment amount as well. So my total PVCO is 25, 1 to 400. So my equivalent annualized criteria would be 25 lakh 1 to 400 divided by PVAF. How do you find PVAF factor? It is just the summation of all the discounting factors. It is just the summation of all the discounting factors, means 1 divided by 1.09 plus 1 plus 1 divided by 1.09 raised to 2 plus 1 divided by 1.09 raised to 3. PVAF is just the summation of the discounting factors. कितना आ रहा है? Present value, total cost is nothing but PVCO only, na? PVCO is what? Present value of cash outflow. So all the cash outflows are to be brought in their present value terms. 2.531. Let's take to 3 decimals. 2.531. So my initial 25, 1 to 400 divided by 2.531. How much is my equivalent annualized criteria का amount? 25, 1 to 400 divided by 2.531. कितना आया? बोलो कितना आ रहा है? 992,651. 992,651. So this is my present value of cash outflow in equivalent annualized criteria terms. It is 992,651. Likewise, we will solve for machine Y. Equivalent annualized criteria for machine Y. ठीक है? So once again, we will calculate PV of running cost per annum, and running cost of machine Y per annum is 6 lakh. It is 6 lakh. So 6 lakh, and life is 2 years. 1.09 raised to 1 plus 6 lakh divided by 1.09 raised to 2. Life is 2 years. To this present value of running cost, we will add amount of initial investment. Since initial investment would be incurred today itself, we don't need to discount that, which is how much? 10 lakh plus 10 lakh. So my PVCO for machine Y comes to, how much is the present value of running cost? 341,103. 6 lakh divided by 1.09. It is 1055,467, I guess. 1055, yes. 1055,467. So my PVCO is 2055,467. And if we divide this by PVAF here, it would be discounting factor of 2 years का summation. ठीक है, since life is 2 years, we will take summation of 2 years. 1.7591, 1.759. So my equivalent annualized criteria for machine Y would be how much? 20, 55, 467 divided by 1.759. It comes to 1168,543. It comes to 1168,543. Correct? So tell me, should I select machine X or machine Y? Sir, machine Y, because PVCO equivalent annualized criteria in terms of PVCO is highest. We should select machine Y. Yes or no? Bolo. Machine Y is the answer. Tell me. Machine X select करना चाहिए कि machine Y? Yes, X. Yes, X. Because here we are comparing the outflow. We are comparing the cost. So जिसका cost minimum, lowest the cost, we will select that. Had this been NPV, then yes, machine Y. Had this 1168,543 been an NPV, then yes, machine Y is correct answer. But here we are comparing the outflows. So lower the outflow, maximum the wealth of the investor. So our answer would be machine X. ठीक है? Any queries in question number 6, friends? Oh, they had given this discounting factor directly. I missed out that. So you can use directly the discounting factor given in the question as well. Any queries, students, in question number? Yes, low PV was. Sukanna is right. Any queries, any concerns in question 4 and 6 or in today's sessions till now? Can we move forward in our lives? Problems given in the module are quite good questions. Huh? They are testing your knowledge from all the concepts. So these questions are quite good for practice purpose. Chalo, let's move ahead. LI Private Limited is planning to invest in a machinery that would cost 1 lakh at the beginning of year 1. Means at the start of the project. So you don't need to discount this cash outflow because it is at the start. Net cash inflows from operations have been estimated at 36,000 per annum for 3 years. So my cash inflows are 36,000 for 3 years. Now company has two options for smooth functioning of the machinery. One option is servicing and other is replacement of parts. So company now has two options for smooth functioning of machine. One, either it can service the machine, or second, replace the parts that are crucial for functioning of machine. If the company opts to service a part of the machine at the end of year 1 at rupees 20,000, in such a case, scrap value at the end of year 3 will be 25,000. So if the company is going for the servicing part, then it has to incur additional cost of 20,000 at the end of year 1. Okay? And in that case, scrap value, bhangar value, salvage value would be 25,000 at year 3 end. Now, if the company decides not to service but to replace, then it has to be replaced at the end of year 2 at a cost of 30,800. Okay? And in this case, machine will work for 1 more year. So replacement of part will result into functioning of machine 1 more year, and that additional year would also generate an inflow of 36,000. It will have to be scrapped at the end of 4th year for 18,000. Assuming cost of capital is 10% and ignoring the taxes, Determine the purchase of machine based on the NPV of its cash flow. So we have to calculate. See, they have asked to calculate NPV and to determine whether the company should opt for servicing or company should opt for replacing. Okay? Replacing the part. And then if the supplier gives a discount of 10,000 for purchase, would your decision change? Okay. So here, primarily, we have to evaluate two projects. Here, the projects are servicing of a machine and another project is, let's say this is project A, servicing of machine. And another project is replacing the part of machine. Let's term it as project B. Company has to choose between these two, whether company should service the machine or to replace the machine. So can I say, again, we will compare the NPV of project A with project B. Okay? The project that generates highest NPV, we will select that. Simple as that. Are you understanding how to attempt, how to process the question? What they have asked in the question and how to attempt that? Flow समझ रहे हैं आपको? You are understanding the flow, students? Okay, so one by one we will calculate NPV. So working note 1. Calculation of NPV when servicing is done. That is, if we are going with project A. Can I say my NPV is nothing but PVCI less PVCO? Yes or no? Correct? So let's calculate PVCI. Let's calculate PVCI when servicing is done. Let's calculate PVCI. Can I say my PVCI would be 36,000 for 3 years? My inflow is 36,000 for 3 years. Yes or no? So 36,000 into 0.9091 plus 36,000 for year 2, and it is 0.8264, 0.7513. 0.8264 plus 36,000 into 0.7513 plus salvage. Don't forget this. You will get scrap value of 25,000 at the end of year 3. Yes or no? So this is also your inflow and it will be generated at the end of year 3. So tell me, what is my total PVCI in this case when we are servicing the parts? बोलो कितना आ रहा है? 108,307.3 everyone. How much is my PVCI? 108,307.3. सबका ये आ रहा है? Is everyone getting this PVCI? Why you are not responding? But I am just right now calculating PVCI. I have not calculated NPV. I am subtracting PVCO. I was just asking PVCI to you all. And machine cost. Machine cost. Let's calculate PVCO. So PVCO. My PVCI is 108,307.3. In the next step, we will calculate PVCO. PVCO would be my initial investment amount, which is 1 lakh. And since it is been incurred at the start of the project, it will not be discounted. But there is additional servicing cost of 20,000. Additional servicing cost of 20,000 that company has to incur at the end of year one. See, it is written in the question. At the end of year one, 20,000 would be servicing cost. So when I say we need to discount that, so 20,000 into 0.9091, 18,182. So my total PVCO comes to 118,182. So when I say my NPV in this case would be 108,307.3 less 118,182, which comes to negative 9874.7. Negative 9874.7. Negative. Or you can write in minus. Bolo, any questions still here? It comes to negative 9874.7. Okay? So it is done. Negative. But the question asks, see, there is another point in the question. If the supplier gives a discount of 10,000, let's say if the supplier gives outright discount of 10,000 for purchase. So can I say in that case, my outflow would not be 1 lakh, it would be 90,000. Yes or no? Because 1 lakh is my outflow, but supplier is giving me a discount of 10,000. So I just need to pay 90,000 to it. So in that case, can I say my initial investment would be 90,000? Correct? So my total outflow would not be 118, but it would have been 108,182. Correct? So in that case, this would be 108,182. And in that case, this would come to positive 125. In that case, it would be positive 125.3. Any queries, friends? Had the discount been given by the supplier? Bolo. Any queries, students? Samjha? So you just need to subtract that 10,000 from initial investment. It is as simple as that. Okay? So you can solve that part as homework. You can solve that part as homework. Huh? Now, let's move to project B. Let's move to project B. Project B is when we are replacing the part and not servicing. So working note 2, calculation of NPV when replacing the part. Again, NPV is nothing but PVCI less PVCO, correct? So my PVCI here, it would be 36,000, but for 4 years, because replacing the part would result in additional cash inflow for 1 more year. So don't forget that. 2.9091 8264 into 0.7513 into 0.6830. And again, friends, don't forget to add scrap value at the end of the life. Scrap value in case of replacement is 18,000. Correct? So 18,000 into 0.6830. Please don't forget this. These are the areas where students do errors and mistakes. Bolo, my total PVCI is how much? How much is my total PVCI? Karo calculate. No, first you need to calculate when cash flows are 1 lakh. That is the separate question that is asked in the question. See, first the question is here only. First the question is still here. Then they have asked if supplier gives the discount, then that is the second part of the question. So you can assume this is part A and discount wala is part B. Understood? So you cannot directly solve by taking 90,000. You have to show it under part B. Bolo, what is my total PVCI replacement of parts is done? One twenty four, 126, 406.8. Yes, 126, 126, 407. And now let's calculate PVCO. In PVCO, my initial investment would be 1 lakh. And since it is happening today itself, no need to discount. Replacement of parts will cost 30,800, but this replacement has to be done at the end of year 2. Huh? So take discounting rate of year 2 and not year 1, 0.8264. So this is another error where students are likely to do mistakes, or another area where students are seen doing errors. They take discounting factor of year 1 instead of 2. 25,453.12. So when I say my total PVCO is 125,453.12. So NPV in that case is 126,407 minus 125,453. 125,453. 954 positive. What is 54,000? Yes, yes, that is also okay. Yes, yes. 54,000 is 36 plus 18. Yes, that is also correct. Answer would be same. So my NPV when replacing the part is 954. So option B, company should go in replacing the part rather than servicing. Are you understanding? And now second part, what if the supplier gives 10,000 discount? So when I say NPV 10,000 se बढ़ जाएगा. How? Because now this outflow would be 90,000. Correct? So 90,000 means here it would be 115,453. Here it would be 115,453. So can I say here it would be 10,954. Following friends. This is part B that you need to solve, but separately. Students, did you get this part? Second part, if the supplier gives discount of 10,000, then my outflow instead of 1 lakh, my initial investment instead of 1 lakh would be 90,000. This 25,000 would remain same. So my total PVCO in that case would be 115,453. And if I subtract it with PVCI, my NPV would increase by 10,000. So in short, you have to just add NPV with 10,000. Any queries? Any doubts in question 7? Any queries? Yes, simple as that. You just add 10,000 to NPV. So our advice here would be to go for replacing the part because NPV is higher than servicing. Servicing it was negative initially, but when supplier gave discount of 10,000, then it came to positive 125. But it, although it was positive, even though supplier gave the discount, it is still less than replacing the part. Okay? The NPV is still less than the NPV of replacing the part. So this was about question 7. So question 7 was again on mutually exclusive type question. You had to select between the two projects, and selection of one project would outrightly mean rejection of other. Question 6 was on equivalent annualized criteria. Equivalent annualized criteria is used only when the life of the projects are unequal. Equivalent annualized criteria is used only when to make the life of the projects equal. Okay? It was on that. All the questions has some unique USP in the module, has something unique. I would say conceptual understanding and rigorous practice would be enough in scoring not just 50, I would say 100 marks. You should score 15 SM as well. So why just FM? You should score 15 SM as well. So conceptual understanding, rigorous practice is key in scoring maximum marks. Let's move to question 8 now, students. Now Jeevan Hospital is considering purchase of a machine for medical radiography, which is priced at 2 lakh. So machine cost is 2 lakh. The projected life of the machine is 8 years and the expected salvage value is 22. No, sorry, not 22, but it is 18,000 at the end of 8th year. Operating cost of the machine annually is 22,500. It is expected that the machine will generate revenue of 1,20,000 per year for 8 years. So when I say this 1,20,000 is my sales, annual operating cost 22,500 would be my cost, correct? Presently, the hospital is outsourcing the radiography work to its neighbor test center and it is earning commission of 36,000 per annum net of taxes. Focus on this word. This 36,000 is after tax earnings, net of taxes. Focus on this words. Okay? Now tell me, friends. Now let me ask you one question. Now visualize. Our hospital has bought a machine. Now the radiography task is not outsourced, but our machine does that radiography task. So, will I be able to earn? Will my hospital be able to earn this 36,000 now when the machine is bought? Tell me, yes or no. Will my hospital earn commission income of 36,000 after the machine is bought? Yes. अभी कंपनी के पास मशीन, हॉस्पिटल के पास मशीन नहीं था इसलिए तो आउटसोर्स कर रहे थे दूसरे को, बट अब मशीन ही आ गया खुद के पास, तो विल दे आउटसोर्स द टास्क एंड अर्न कमीशन इनकम? Obviously not. Now machine will do the work of radiography. Why will they outsource to other test center? We have bought the machine to do that task only, to do the radiography task. So why will the hospital now give that radiography work to another test center? It will do on its own, na? Now the company has bought the machine. Yeah, are you understanding? अब तो कंपनी के पास ही वो मशीन है, तो क्यों आउटसोर्स करे किसी और जगह पे? आर यू फॉलोइंग दिस? नो नो नो. Now the company, now the hospital. See, that assumption can be correct only when question specifies, Neha. You cannot outrightly assume that now our hospital will earn commission income. No, that question has to specify. But in short, my point is now the company will not earn this commission income of 36,000. Why? Because company has the machine of radiography. It will not outsource it to other test center, and it will not earn commission income of 36,000 after taxes. Correct? So can I say this commission income lost is my opportunity cost? Yes or no? This 36,000 of income lost is my opportunity cost, and opportunity cost is relevant for our investment decision. This is what we have studied. It is irrelevant for accounting income perspective, but it is relevant for our financial management perspective, for our investment decision perspective. So can I say opportunity cost will be my cost, will fall under outflow? Correct? So this is the unique point in this question. The unique point is opportunity lost, which is opportunity cost. Understood? So let's calculate NPV. Let's calculate NPV. See, they have asked to calculate NPV and PI. So let's first calculate NPV. NPV is nothing but PVCI less PVCO. So let's focus first on PVCI only. Calculation of PVCI. Can I say by buying the machine, it will generate sales of rupees 1,20,000 per annum? Yes or no? But not just sales, there would be some operating cost as well. Operating cost is how much? 22,500. Correct? So this I need to subtract. We are just preparing the format of cash flows. 120 minus 22,500. So the resultant figure is termed as NPBDT, net profit before depreciation and tax. 97,500 less depreciation. Depreciation would be how much? It would be on SLM basis, because method is not been specified in the question. So SLM basis depreciation would be 2 lakh of cost less salvage. 18,000 divided by life is 8 years. It comes to 22,750. Correct. 22,750 कैसे आया? तो 2 lakh is my original cost less salvage. Salvage is how much? 18,000. And life is 8 years. So NPBT comes to 74,750. 74,750 less tax. Tax is at how much percent? How much is the tax rate? Correct. 74,750 is my NPBT. Tax is at 30%. So my tax comes to 22,425. So my net profit after tax comes to 74,750 minus 22,425. 52,325. And with NPAT, we add depreciation, because depreciation is a non-cash expense. But just to calculate tax shield, we consider depreciation. Depreciation was 22,750. So my cash inflows per annum after tax comes to 75,075. Any queries till here, students? Bolo, any queries till cash inflows per annum? Any queries till cash inflows per annum? No queries. Now from this, now very important point. When I say I have to subtract the opportunity cost from this cash inflows. Why? Because opportunity cost is relevant for financial management. From accounting perspective, from GAAP principles, it may not be relevant. But as far as investment decision or as far as FM is concerned, opportunity cost is relevant. So opportunity cost, it is a cost. I need to subtract it from inflow, 36,000. Correct? So my relevant cash inflows after tax is my relevant cash inflows after tax is how much? Minus 36,000 is 39,075. You can say relevant cash inflows, or you can say differential cash inflows, or you can say incremental cash inflows. Sir, who is earning commission income? Commission income earlier our hospital was earning. How? Because we were outsourcing that radiography task to another test center. So can I say they are getting work from us? They are getting that radiography task. They are getting that radiography work from our hospital. So as a professional referral, they would give some commission to us. This is how referral works everywhere. Let's suppose I provide service of project report and some another CA does not provide that service of project report. So if he gets any client, he will outsource it to me and I will pay him 15%, 20% as his referral charges or as his commission. Understood? So initially we were earning that referral commission, but now I will not be earning that referral commission. Why? Because I have set up that radiography task in my hospital. So why would I outsource to someone else? Why should I pay the referral fees? Instead, I should earn. So when I say my relevant cash inflows, my additional or my incremental cash inflows would be 39,075. Understood? So initially our hospital was earning that commission income, and now our hospital will not that commission income, will not earn that commission income. Okay? So that's why it is an opportunity lost. Any queries? Students, any queries? Now my question to you, why did I subtract this after tax? Why didn't I subtract over here? See, cost from sales I subtracted operating cost. Then why did not I subtracted opportunity cost over here itself? It is also a cost just like operating cost. Why didn't I subtract over here? My question to you all. Bolo. It is just like any other cost. So why? Why? What's the reason I didn't subtract before tax? Sir, yes, Sukena is correct. Sukena is correct because it is after tax only. See, read the question carefully. They have said that 36,000 is net of taxes. Had this word net of taxes not been mentioned, then we would have subtracted with operating cost only. Are you getting this? Then our opportunity cost would have been subtracted here itself. Had net of taxes word not been mentioned, then are you following? Students, are you following? Yes, Shravan is correct. Everyone is correct. Yes. Bolo, any queries? So that's why, since it is net of taxes, I subtracted after taxes. Correct? So you need to read the question carefully. This is my purpose to point this out. You need to read this question carefully. It is net of taxes. So whereas my relevant cash inflows is 39,000 per annum, I just simply need to discount this cash inflows every year with the discounting rate? Yes or no? Correct. So my PVCI would be 39,075 multiply by, we can directly multiply it with PVAF factor. PVAF factor is, discounting rate is 10%, and for how many years? For 8 years. ठीक है, तो कितना आएगा? It is nothing but 39,075 multiply by, हाँ, it is annual yearly cash outflow लिखा है ना. The annual operating cost is 22,500. Annual word लिखा है ना, it is annual. Here they have mentioned that it is annual operating cost, yearly. ठीक है. So now let's multiply it by PVAF. PVAF is the cumulation of all these factors, of all the discounting factors for 8 years. 0.909 plus 0.826 plus 0.751 plus 0.683 plus 0.621 plus 0.564 plus 0.513 plus 0.467. So my PVAF factor comes to 5.334. 5.334. So my PVCI is 39,075 multiplied by 5.334. It comes to 208,426. But again, friends, don't forget to add present value of salvage. Please don't forget this. Humble request. Don't forget to add salvage. Salvage is 18,000 and it would be received at the end of 8th year. So when I say 18,000 multiply by discounting factor at 10% for 8th year. So it is nothing but 18,000 multiply by 0.467, which comes to 18,000 into 0.467, 8406. So total PVCI is 208,426 plus 8406. 208,4 comes to 216,832. No, it is 216,832. It comes to 216,832. Correct? And my PVCO is just, my PVCO, present value of cash outflow, is just initial investment of 2 lakh. Since it would be at the start of the project, we don't need to discount this. So my NPV in that case would be 216,832. 216,832 less 2 lakh, which comes to positive 16,832. 216,832 is correct. So NPV is positive. So this is Roman number 1, and in Roman number 2 they have asked us to calculate profitability index. Correct? So profitability index ka formula is, can anyone tell me what is the formula of profitability index? Chalo, now you all are experts in this chapter. What is the formula of profitability index? PVCI upon PVCO. Correct. Shravan is correct. PVCI divided by PVCO. So PVCI is 216832 divided by 2 lakh. Comes to 1.0842. PVCI upon PVCO. Sukena is also correct. So understood, the unique point or the unique adjustment in this question was about identifying the opportunity cost. And how is that commission income and opportunity lost? So you have to think. Currently, company used to outsource this radiography task to some other test center. Means हमारे पास जो patient आते थे radiography के लिए, we used to directly send them to another test center, and that test center used to give us some revenue in form of commission of 15 to 20%, whatever the rate it may be, because our patient are going there. Understood? But now, since we have set up the radiography machine in our hospital, now we won't send our patients to another test center. Are you getting this? We will only do their treatment using our machine. So when I say now onwards, I will lose that opportunity to earn commission income, and that's why it is an opportunity cost. Someone had doubt about, so that's why I again repeated. Someone had asked about that, sir, can you please explain opportunity cost? So just I repeated one more time that how that commission income is now an opportunity lost to the hospital. Followed, friends? Followed? So that was a unique pointer, a unique adjustment in question number 8. Rest all everything was simple. You just need to prepare a format of cash inflows, and you just need to calculate cash outflow and then calculate NPV and PI. But one more additional point was that commission income is net of tax. Had the net of tax word not mentioned in the question, then we used to consider that opportunity cost as just like any other cost. Okay? So we used to deduct that from sales itself. So read the question very, very carefully. Next best alternative cost, or next, I would say, the opportunity lost in earning some income, that is opportunity cost. Opportunity lost to earn some income, that is opportunity cost. Okay? Can we move forward? Can we move to next question now? Okay, let's move to question number 9. Let's move to question 9. XYZ Limited is planning to introduce a new product with a life of 8 years. Initial cost is 3.5 crore. Additional equipment cost will be 25 lakh, but it will be purchased at the end of 3rd year from the cash inflow of that year. Are you getting this? So my initial investment is 3.5 crore, but at the end of 3rd year, I need further investment, which is 25 lakh. So when I say this 25 lakh needs to be discounted because it is incurred at the end of 3rd year. Correct? At the end of 8 years, the original equipment will have no resale value. Means this 3.5 crore equipment will have no scrap value. But the additional equipment can be sold for 250. So this additional equipment will have scrap value of 250. So again, we will take the scrap value, we will discount it. Simple as that. A working capital of 40 lakh will be needed and it will be released at the end of 8th year. So here the unique point is on working capital. Cash outflow. For which question you are asking, Shravani? Question 9. Yes, this 25 lakh is additional equipment that we have purchased. So obviously it is an outflow, but it would happen at the end of year 3. So we will discount that cash outflow as well. And in addition to buying these machines, to buying this equipment, we have working capital investment. So remember, working capital is an outflow at the beginning, but it is an inflow at the end of the life of the project. This is what we have learned, and this is what they have written over here as well. That working capital will be released at the end of 8th year. Means कि हमें वापस मिल जाएगा वो 40 lakhs. That is an inflow. The project will be financed with equity capital. The sales volume over 8 years have been estimated as follows. So these are sales in volume, that is in units. Sale price is 240 and it is expected, 240 per unit of sales price is expected and variable cost will amount to 60%. So in short, my contribution would be 40% of this 240 per unit. Yes or no? So my contribution per unit would be 96 rupees. Fixed cash operating cost will amount to 36 lakh per year. Friends, again focus on this word. Cash means this 36 lakh is excluding depreciation. Are you getting this? They have just mentioned about cash operating cost, not non-cash expense. So this 36 lakh is excluding the amount of depreciation. The loss of any year will be set off from the profit of subsequent 2 years. Now this element, this twist is about taxation. जैसे taxation में loss from 1 year could be set off against profit of another year subject to certain set of carry forward का rules. वैसे ही इसमें भी loss of any year would be set off against profit of next year. The company is subject to 30% tax and considers 12% to be an appropriate cost of capital for this project. So my discounting rate is 12%, income tax rate is 30%. Company follows SLM basis of depreciation. Calculate NPV of the project and advise the management. So again, in this question, we have to calculate NPV. And if you remember, I had initially said that NPV technique is one of the most important technique, not just from examination point of view, but from practical standpoint as well. In reality, in practical corporate finance world, we use that technique or we give highest weightage to NPV technique. So again, let's calculate NPV. So see, how should you approach the question? Your attempt should be, first, what is asked? They have asked NPV. So simply write down the formula. It is nothing but PVCI minus PVCO. Correct? Now, focus on PVCI first. Now just focus on PVCI first. Forget about PVCO. Just focus on PVCI. Okay? So can I say they have given facts and data starting from sales? So our cash inflow format would start from sales and will end at cash inflows after tax. पूरा format बनाना है starting from sales. So sales, or you can start from variable, contribution as well. Contribution less fixed cost will give me NPBDT less depreciation will give me NPBT less tax will give me NPAT. We will add depreciation back to this NPAT. I will get cash inflows after tax. Okay? And to this we will add any salvage. Any doubts till here? I have just prepared the format and upper I am writing the years. So year is 1, 2, 3, 4 to 5, 6 to 8. 1, 2, 3, 4 to 5, 6 to 8. Any queries in the format, students? Can we proceed? Bolo, can we proceed? Okay. So, sales, bolo, sales amount would be, can we save some time and start from contribution per unit? Yes or no? Sales is 240, variable cost is 60%. So when I say my contribution would be 240 ka 40%, which comes to 96 per unit. So let's start directly from contribution. 96 per unit. So you just multiply this 96 with yearly sales volume. So for year 1, it would be 96 into 72,000, which comes to 69 lakh 12,000. If you want to start from sales, then also you can start. But as of now, to save some time, we are starting from contribution. For year 2, 108 into 96. 10368. 10368. There would be now some space constraint. 260 into 96. 249.60. 249.60. For 4, year 4 to 5, 270 into 96. 259.20. 259.20. And for year 6 to 8, 180 into 96. 170 to 80. You can also simultaneously calculate with me, because I have told you my calci does not give correct first number. So you can also simultaneously calculate and check. Fixed cost is 36 lakh per annum. Yes or no? And fixed cost remains constant every year. I don't need to explain for fixed cost. So my NPVDT in this case would be 69 lakh 12,000 minus. Students, you also simultaneously calculate along with me. You also solve. 67, 68. Minus 36 lakh. 1360. 223.20. 172.80 minus 36 lakh. 136. Till NPBDT. Are you all getting the same values? Till NPBDT. Are you got? Yes, 628, 136. Correct. Now depreciation. See, depreciation, they have specifically mentioned that depreciation is to be calculated using straight line method of depreciation. So can I say for year 1 to 8, for year 1 to 8, depreciation would be on this machine. But from year 3 to 8, I need to provide depreciation on additional equipment as well. Yes or no? This, see, there are two machines in the question. One is the initial equipment, which is 3.5 crore. So it will be depreciated over 8 years. And we have also purchased additional machine. But at the end of third year, So can I say additional equipment which is of 25 lakh, we need to provide depreciation for 5 years from year 3 to 8. So there would be two amounts of depreciation from year 3 to 8. Huh? Please understand this, because there are two machines and both the machine will generate depreciation expense. So working note 2 will be on calculation of depreciation on original equipment which is of 3.5 CR. And this original equipment does not have any scrap value. Huh? It is mentioned in the question. So can I say depreciation of original equipment would be 43 lakh 75,000 per year. Correct? And on additional equipment, again there would be depreciation, but it would come from year 3 to 5 because we have bought this additional equipment at the end of year 3. So additional equipment is costing 25 lakh, but it has salvage value. Huh? It has salvage value of 250. ध्यान से पढ़ो question. It has salvage value of 250 and life of that additional equipment is 5 years and not 8 years. So 4,50,000 is on additional equipment. Bolo, any queries in depreciation? Yes, 450 for additional equipment. Any queries in the amount of depreciation, friends? So can I say 43 on original equipment? I have to provide for all the 8 years. 4375 depreciation would come for all the 8 years. Correct? But that depreciation on additional equipment would only come from year 4. Are you getting this? Would only come from year 4 to year 8. Samjha? Because additional equipment is purchased at the end of year 3. So depreciation will start from year 4 and it will go on till year 8. So this is one of the unique point, or see, this is not, I would not say unique point, but this is a point where students are likely to do error. And we have seen that. So my NPBDT for year 1 is 3312 minus 4375. Negative 1063. Negative 1063 for year 1. For year 2, it is 6768 minus 4375. 2393. For year 3, 21360 minus 4375. 16985. For year 4, don't forget to deduct depreciation on additional equipment as well. 22320 minus 4375 minus 450. So it comes to 174.95. And for year 5, 13680 minus 4375 minus 450. 8855. Bolo, any queries in till NPBDT? Any queries till NPBDT? For year 6 to 8, it is not 8750. Sorry, 13680 minus 4375 minus 450. 8855 आ रहा है for year 6 to 8. NPBDT. Till here it is clear, correct? Till here everyone is clear. Because now the crucial point comes. The unique point of this question comes now. Yes, 628, not 528, 628, 8855. What is that unique point? Can I say in year one there is a loss of 1063? So do I need to pay any taxes in year one? Yeah, obviously not, na. When there are losses, how can you pay taxes? So NPAT would be 1063 negative for year one. Yes or no? And depreciation is 4375 for year one. So my cash inflows for year one is 4375 minus 1063, 3312. Correct? Any queries for year one? I'm going very slow so that you can digest, you can grasp it. Any queries still here? Now the crucial point starts. Huh? Since year one there is no income, rather it is a loss, I would not pay taxes. Now the question specifically says that loss of any year will be set off from the profits of subsequent year. So in year 2, I don't need to pay taxes on this entire amount. Are you getting this? I don't need to pay taxes on 2393. I will set off this loss first and then calculate the taxes. Are you getting this? This is mentioned in the question. Loss of 1 year needs to be set off against income of another year. So working note 3 would be calculation of tax for year 2. Can I say NPBT for year 2 is 2393, 23,93,000, correct? From this income, I will first set off the loss of year 1, which was 1063. So for year 2, my taxable income would be 2393 minus 1063. This is my taxable income, which comes to 1330. So I will just pay tax on 1330 and not on 2393. Are you following, friends? So my tax would be 399, 3,99,000. Correct? Correct. So here in year 2, my tax would be 3,99,000. Hope everyone understood this. So 23, so my year 2 ka NPBT is 2393. 2393 minus tax is 399. So my NPAT comes to 1994. And depreciation is 4375, which we will add. So my year 2 ka cash inflows comes to 63,69,000. Now from year 3, it is normal. From year 3, it is normal. Because losses has been set off. Are you getting this? Losses have been set off with the income of year 2. So now for year 3, we have to calculate normal. 169,85,000. 169,85,000 less 30% tax, which will generate an after tax NPAT of 118,89,500. 118,89,500. And I will add 4375 as a depreciation. So my cash inflows for year 3 would be 162,64,500. For year 4 to 5, again I will subtract tax, or I will pay tax on 174,95,000. Correct? So my after tax NPAT for year 4 comes to 122,46,500. But in year 4, the depreciation is not just 4375. It is 4375 plus 450, which comes to 4825. So here I will add 4825. And my cash inflows from year 4 to 5 is 170,71500. Similarly, let's calculate after tax cash flows from year 6 to 8. 6198 500 plus 4825. So 110,23500. These are my cash inflows from operations from year 1 to 8. Any queries, friends? कोई डाउट है इसमें? Did you understand this part? This is very important. Taxation. This was the unique point of this question. That losses of 1 year needs to be set off against losses of another year for calculating the tax amount. Understood? So my cash inflows. Can I say apart from this cash inflows, apart from this yearly cash inflows, there would be salvage of 250 at the end of year 8? Yes or no? At the end of year 8 plus 250, but not from year 6 to 8. It will only be in year 8. Huh? And apart from this, again, don't forget, see another area of error. Release of working capital. Release of working capital. The working capital that I have invested at the start of the project will be released, will be recovered back to me at the end of year 8, which is 40 lakhs. So plus 40 lakhs. But again, in only in year 8, huh? Not from 6 to 8. Understood? So these are my stream of cash inflows. These are my stream of cash inflows. Now the next step is just to discount this stream of cash inflows. Are you following? Any queries? So let's discount. Let's discount. Now let's do the discounting part. Here 1, 2, 3, 4 to 5, 6 to 7, and 8th year specifically I am taking separately. Why? Because I have to add salvage and working capital release as well. Yes, span is 6 to 8 years. But working capital and salvage would only be recovered at the end of 8th year. Huh? Span of 6 to 8 years means they have given this span because the cash inflows are constant in those years. That's why they have given that span specifically. So year 1 ka cash inflow is 33. Cash inflow 33 1 2 000. For year 2 it is 6369. For year 3 it is 162 64 500. 162 64 500 for year 4th and 5th. Huh? So you have to interpret like this, that in year 4th company has earned 170 71 500, and in year 5 also company has earned 170 71 500. One 70 71 500. From year 6 to 7 it is, or else just to avoid confusion, let's take each year separately only. Let's take each year independently. 4, 5, 6, 7, and 8. So in year 4, it is 170, 71, 500. 170, 71, 500. Again in year 5, it is same as year 4. In year 6, it is 110, 23, 500. 110, 23, 500. In year 7, again same cash flow. But in year 8, it would be 110, 23, 500 plus salvage of 250. Plus salvage of 250 and plus working capital release of 40 lakhs. Are you getting this? Understood? Question has specifically given the discounting factors for each year. So we will just simply multiply with the discounting factors and we will calculate PVCI. चलो तो करो सब अब, multiplied with discounting factor with of each year. 0.893, 0.797, 0.712, 0.797, 0.712, 0.636, 0.567, 0.636, 0.567, 0.65, 0.507, 0.452, 0.507, 0.452, and for the last year it is 0.404. So you just need to multiply individual or yearly cash flows to the discounting factor and calculate total PVCI. Is this total PVCI? 152, 73, 500. No, can you all calculate for all the years and give me the total amount? I just want the total PVCI. I don't want yearly present value of cash inflows. I want the total amount. I hope you can at least calculate PVC. By now, investment decision is completely covered and done. So you should know how to calculate present value, how to calculate future value, what is release of working capital. This all thing you should know. Is someone calculating or not? Or we can see the solution as well to avoid or to save time. So these are the pattern of cash inflows. See, 33, 12, 63, 69, 162, 64, 500. 33, 12, 63, 69, 162, 64, 500. Then it is 170, 71, 500. 170, 71, 500. 110, 23, 500. 110, 23, 500. From year 6 to 8. And then they would have separately calculated. They would have separately calculated for salvage and release of working capital. How much is सबका अलग अलग क्यों आ रहा है? It is 551.111 for Kiran. Pritesh के हिसाब से they don't see the answer. It is here they have subtracted year 3 का outflow. We haven't subtracted that additional equipment cost from PVCI. We will separately consider that under PVCO. So 161.11 is not the correct answer. You just take this table and solve. You have to just simply multiply the cash inflows with individual discounting rate. It is as simple as that. 3312 into, I think I only need to do because everyone is getting incorrect or different. So for year 1 it is 29,57,616. For year 2 63,69 into 0.797, 50,76,093. 162,64,500 multiply by 0.712, 115,80,324. 170,71,500 multiply by 0.636, 108,57,474. Again 170,71,500 multiply by 0.567, 96,79,541. 110,23,500 multiply by 0.507, 55,88,915. 55,88,915. 102,3,500 multiply by 0.5452, 49,82,622. And for year 8 it is 110,23,500 plus 42,50,000 multiply by 0.404, 61,74,94 are the present value of individual cash inflows of individual years, correct? Plus 49,82,622 plus 55,88,915 plus 96,79. Now you just need to add this cash inflows. 4 plus 115,80324 plus 76,093 plus 29,57,616. 568,93,079. Yes, Pritesh was correct. क्या ऐसा कौन से अमाउंट? What are you calculating all? The amount is 568,93,079. This is total PVCI. How you are getting different figures, I don't know. It is just simple multiplication of cash inflows with discounting factors of respective years. No rocket science is involved here, but still everyone is getting different answers. Anyways, you can check this. The correct answer is 568,93,079. Now, next working note is calculation of PVCO. Working note 4. Calculation of PVCO. Can I say in year 0, that is at the beginning of the project, I would invest in the equipment cost of 3.5 CR? Yes or no? Plus working capital. I need to also invest in working capital as well. I hope my table is not gone up. Oh shit. ठीक है. I know the total PVCI was total PVCI was 568,93,079. And next working note. Now it is correct. 568,93,079. Next working note, we will calculate PVCO. So in PVCO, at the start of the project, we will invest in the equipment cost, which is nothing but 3.5 CR. And since it is at the start of the project, no need to discount. We will also invest in working capital, which again will be invested at the start of the project. So no need to discount. But at the end of year 3, we will purchase additional equipment. We will purchase what? Additional equipment of 25 lakh. But can I say, since this cost will be incurred at the end of year 3, we need to discount. Discounting rate for year 3 is 0.712. 25 lakh into 0.712. 17,80,000. Apart from this, are there any other cash outflows? No, apart from this, I could not see any other cash outflow given in the question. So my total PVCO amounts to 390 plus 17 lakh 80. 3 crores 90 lakhs. 4 crores 7 lakh 80,000. Correct? So my NPV is nothing but 568 is nothing but 568,93,079. 93,079 less 407,80. 161,13,079. So this is my NPV. Understood, everyone? So my NPV comes to see 161.11. Can you see this? And even ours is coming 161.13. They have converted in lakhs. Follow students, any questions? This was a lengthy question, but the only unique point in this question was about the setting of the losses against the income of next year for tax purpose. Are you getting this? The question was lengthy for solving purpose, but the only unique point in this question was this part, setting of the losses against income of future years. Other participants, clear, everyone? Any questions? Any doubts? Follow. Any doubts? Can we move ahead with next question? Okay. Now let's take question 11, because that is also one of very unique questions in itself. It is on replacement of machine. So under capital budgeting, ideally there are two type of questions. One is mutually exclusive type questions and one is replacement questions. So under mutually exclusive type question, selection of one means rejection of all. Under replacement decision questions, you need to calculate incremental NPV. What do you mean by incremental NPV? Incremental NPV means additional NPV that company would be generating if replacement is done. So let's say currently we are using existing machine and now we are contemplating to use or to replace the existing machine with the new machine. So this is replacement type question. You are contemplating or you are evaluating replacement of new machine with existing machine. So in that case, we use incremental approach. What is incremental approach? You first calculate NPV as if the existing machine had been continued. What is your first step? You calculate NPV as if the existing machine was continued in the company. Next step, calculate NPV as if the new machine had replaced the existing machine. And then compare both the NPVs and find incremental NPV. Are you following? What is incremental? Incremental is nothing but the additional benefit that replacement or that replacement of machine brings to the company. Are you getting this? Following? So incremental NPV is nothing but differential NPV or additional NPV that replacement of machine would bring to the company's table. Any doubt? Let's solve this question. You will get better clarity on replacement type questions. Question 11. Zavli Limited has a machine which has been in operation for 3 years. So currently, company is using an existing machine and that machine has already been used for 3 years. Okay? The bygone is bygone. Huh? The 3 years are gone now. We are not concerned with that. We are concerned, ab se kya hoga? We are concerned with that. The machine has remaining life of 5 years. So 3 years are gone. Remaining life is 5 years. The machine will not have any salvage value in the end. Its current market value is 2 lakh. What is this current market value? This is nothing but if we want to buy the new machine, then we will buy at 10 lakh. But obviously company will sell out this old machine, this existing machine, and the sale value of that existing machine would be 2 lakhs. Correct? This is what current market value of existing machine means. The company is considering a proposal to purchase a new model of machine to replace the existing machine. So company is contemplating or it is evaluating to replace the existing machine with the new model. The relevant information is as follows. So existing machine का information दिया है, new machine का information दिया है. Sir, why 8 years of existing machine? Why 8 years life is given? Sir, ऊपर तो 5 years लिखा है. Then why 8 years is given in the table? Can I say 3 years is already been used? Existing machine has already been used for 3 years. So the original life is 8 years only. Are you getting this? The original life of machine is 8 years only. 3 years have passed. So from now onwards, the balance life is 5 years. So these are the cost and sales details given in the question. The company uses written down value method of depreciation and it has several other machines in block of assets. This entire line is very important. This is the unique point of this question. First, till now, we calculated depreciation using SLM. But in this question, for the very first time, we will use WDV method. And second, they are asking or they are giving some information on block of assets. So when block of assets terminology appears in FM, you should directly connect with taxation. Even in taxation as well, to calculate depreciation, we used to follow the block of asset method. Yes or no? Same method in this question we will follow using block of assets. Okay? Income tax rate is 30% and company does not make any investment if it is less than 12%. So this 12% is nothing but your discounting rate. 12% is nothing but your minimum rate of return that is required from the project or from the replacement of new machine. Okay? So now, block of assets, when we will solve the question, you will automatically get clear. आपका डाउट क्लियर हो जाएगा व्हेन वी विल सॉल्व द क्वेश्चन ना, उसमें ही हो जाएगा. ठीक है. सो नाउ सी, नाउ द क्वेश्चन इज ऑन वेदर. पहले तो ये कौन सा क्वेश्चन है? क्वेश्चन 11, इलस्ट्रेशन 11. ठीक है. वेदर existing machine should be replaced or not. This is what we have to decide, yes or no. So this is replacement type question, and whenever replacement decision making is asked in the question, you follow incremental approach or you do incremental analysis. Now what is this incremental analysis? Incremental analysis is nothing but first step is you calculate NPV as if existing machine had continued in the business, as if we are continuing with the existing machine. Are you getting this? First step is to calculate NPV as if we are continuing with the existing machine only, is continued and used. Okay. So again, to calculate NPV, base is clear. NPV is nothing but PVCI less PVCO. So now just focus on existing machine. Just focus on existing machine. We will calculate NPV of existing machine. Okay. So when I say to calculate NPV, we need to calculate PVCI. So for PVCI, I need to start it from sales. So sales is how much? Sales is 30,000 units multiplied by 15 per unit, which comes to 450. Less cost. Cost would be my material cost, labor cost, and indirect cash cost. Material cost, labor cost, and indirect cash expense. How much is the material cost? Material cost is 4 per unit and number of units are 30,000. Whereas it comes to 120. My labor cost is how much? It is per hour basis. And annual operating hour is 3,000. So 3,000 into 40, again 120. And indirect cash cost is 50,000. So when I say my NPBDT comes to 450 minus 270, yes or no? 180. Correct? What doubt you have in last question? What is the doubt in last question? We have very short time now. Please let me know very quickly. Oh, in question 14. If time permits, we will solve that question. If time permits. But as of now, let's solve this. So when I say my NPBDT is 1,80,000 if existing machine had been continued in the business, yes or no? Any doubts still here, friends? I will go at a slow pace for this question because replacement type questions also hold a great weightage from examination perspective. Any doubts still here, students? So if existing machine was continued in the business, my NPBDT would be 180. Now, if new machine is replaced in the business, then let's calculate what is my NPBDT. Okay? So sales in that case would be 75,000 into 15, correct? 75,000 into 15, which comes to 1125, less again material cost, labor cost, and indirect cash cost. So material cost, if new machine was used, then 75,000 into 4, which comes to 3 lakh. Labor cost, labor charges are 70 per hour and number of hours is 3,000. So in that case, my labor cost would be 2,10,000 and indirect cash cost is 65,000. So my NPBDT, if new machine was replaced, sorry, if old machine was replaced with new machine, it is 1125 minus 5 lakh 10 minus 65, 5 lakh 50,000. So in short, can I say my incremental NPBDT, my incremental NPBDT per year would be 550 minus 180. Yes or no? 550 minus 180, which comes to 370. Bolo, any doubts still here, friends? This is 160. 450 minus 240, 290. Yes, 160. Yeah, this is not 180. This is 160. So my incremental benefit would be 550 minus 160, 390. Bolo, any doubts still here? Pakka. So, friends, see, there are total 5 years from now. There are total 5 years from now. Yes or no? 1, 2, 3, 4, and 5. My incremental NPBDT would be 390 every year. Incremental is nothing but the additional benefit, additional NPBDT that existing machine generates by replacing to the new machine. From this, I need to subtract incremental depreciation. Are you getting this? From this, I will subtract incremental depreciation and I will get incremental NPBT. From this, I will subtract the tax. So I will get incremental NPAT. Correct? To incremental NPAT, I will add back the incremental depreciation and the resultant figure would be incremental PVCI. Are you following, friends? Incremental PVCI. See, now instead of just taking NPBDT, just taking depreciation, just taking NPAT, we are taking incremental NPBDT, we are taking incremental depreciation, we will get incremental NPBT, less tax, we will get incremental NPAT, and then we will get incremental PVCI. Sorry, not PVCI, but just incremental cash inflows. Present value के लिए तो we need to multiply it with the discounting factor. So this would be just incremental cash inflows. Bolo, any queries still here? Friends, any queries still here? We have very short of time, huh? Bolo, any queries still here? आगे बढ़े. So can you see incremental NPBDT comes to 390, 550 minus 160. Okay. Now next task and the very important task is calculating incremental depreciation. This is very important, or I would say crucial point of this question. So how to solve incremental NPV? Incremental depreciation. Again, let's calculate depreciation. Calculate depreciation if only existing machine was there. If only existing machine was there. Then how much would be my depreciation per year? Bolo. If only existing machine was there, the original cost is 330 and value of depreciation is the rate of depreciation is 20%. And 3 years has already been elapsed. 330 is the original cost. So we will start with 330 less 20% for 3 years. So less 20% one time, less 20% two times, less 20% three times. So can I say current WDV? Current WDV is 168,960. Yes or no? Current WDV on which depreciation is to be provided for 5 years is 168,960. Friends, कैसे आया? So 330 is my original cost of machine. I would have depreciated that for 3 years. Yes or no? Less 20%, less 20%, less 20%. Correct? Any questions still here? So can I say only existing machine was there in the question? I need to provide depreciation starting from WDV of 168,960. Any doubts? Any doubts? So in short, can you provide me now depreciation amount for year 1, year 2, year 3, year 4, year 5? If only existing machine was continued. So 168,960 into 20%. So for year 1, it would be 33,792. This would be the depreciation amount from year 1. Yes or no? It would be 27,033.6 for year 2. It would be 21,626.88 for year 3. It would be 17,301.50 for year 4. And for year 5, it would be 13,841.2. Are you following? कैसे आया ये? तो we will start with 168,960 for year 1. Had the existing machine continued, so my depreciation would be 168,960 पे 20%. Yes or no? Any doubts in the amount of depreciation each year if only the existing machine was there? Forget about replacement. If the company had continued with the existing machine, this would be my amount of depreciation each year, 33,792, 27,033.6. Clear? Okay. Now, let's calculate depreciation if new machine was replaced. Calculation of depreciation if existing machine is replaced with new machine. Now see what would happen. Huh? Now see what would happen. First of all, depreciation. Now we have to visualize. Now just visualize. I have replaced the new machine with old machine. Okay? I have replaced the old machine with new machine. Sorry. I have replaced the new machine with existing machine. See now how block of assets depreciation is calculated. Huh? Can I say my opening WDV plus purchase less sale amount gives me closing WDV on which depreciation is to be provided as per income tax rules? Yes or no? As per IT rules? This is little complicated part. Huh? Please listen very carefully. What is block of asset? You take opening WDV of assets under that block. Yes or no? You add any new machine which is added in that block. You add that and you subtract the machine which is deleted from that block. This is how block of assets is calculated. Correct? So my opening WDV, if the new machine is now replacing the old machine, can I say opening WDV would be this amount 168,960? ये ब्लॉक ऑफ असेट्स में ये अमाउंट दिख रहा होगा तब as on the date of replacement. Are you getting this? As on the date of replacement, ब्लॉक में old machine रहेगा 168,960 का. Correct? So my opening WDV would be 168,960. Correct? Then I am purchasing the new machine. I am purchasing the new machine of 10 lakhs. I am purchasing the new machine of 10 lakhs. So I will add that. And I am, since replacing the old machine with new machine, I will sell out this old machine. I will sell out this old machine. Correct? At what value? At its current market value, which is 2 lakh rupees. Are you following this? So my sell price would be 2 lakh. So my closing WDV for depreciation purpose would be 168,960 plus 10 lakh minus 2 lakh. Are you getting this? So to depreciate the new machine, I will not use 10 lakh. I will use 968,960. Everyone understood this? This is very unique point of this question. This is the important part of this question, that you have to provide depreciation on block of asset basis. So what is block of assets as per income tax? You take opening WDV of all the assets under that block. So can I say as on the date of purchase, this would be my opening WDV? Correct? Now I am buying the new machine. Correct? I am buying the new machine and replacing the old machine. So can I say my buy amount, my purchase price is 10 lakh and I'm selling, I'm replacing the old machine, means I'm selling out that old machine at 2 lakh. So my block of assets WDV for depreciation purpose would be 968,960. Is everyone following this? This was very important part. Is this concept clear to you? Block of assets. Understood? So my depreciation for new machine for each year would be on 968,960. So for year 1, it would be 968,960 ka 20%, which comes to 193,792. This is the depreciation for had the new machine replaced the old machine. 968,960 into 20%. And now you keep on depreciating at 20%. So for year 2, it would be 155. It would be 155,034. For year 3, it would be 124,027. And for year 4, it would be 99,222. For year 5, it would be 79,377. Are you getting this? So if the old machine was continued, these are my stream of depreciation each year. And if the new machine is replacing the old machine, these are my stream of depreciation. Are you following this? Are you following? I think only Shravani is following. Rest everyone is blanked out, I guess. See, if old machine is continued, then these are the stream of depreciation for 5 years. And if new machine is replacing the existing machine, these are the stream of depreciation for 5 years. So can I say my incremental depreciation per year would be incremental? We are concerned with incremental depreciation. We are not concerned with depreciation of old machine. Neither we are concerned with depreciation of new machine. We are concerned with incremental depreciation. So when I say incremental depreciation for year 1 would be 193,792 minus 33,792. Yes or no? Minus 33,792. 193,792 minus 33,792, which comes to 160 for year 1. And this we will subtract from incremental NPBDT. Hope everyone understood this. Okay? So likewise, you will calculate incremental depreciation for year 2, for year 3, for year 4, for year 5, and likewise you will subtract that amount from incremental NPBDT of respective years. Are you getting this? समझ रहा है सबको? So my incremental NPBT for year 1 is 390 minus 160, which comes to 230. Tax rate is how much? Tax rate is 30%. Tax rate at 0.3. So can I say my incremental NPAT would be 161. We would add incremental depreciation, which is 160. So my incremental cash inflows would be 3,21,000 for year 1. Hope everyone followed this. देखो आ गया 3,21,000 for year 1. Can you see this? Incremental cash inflows for year 1. We have solved in vertical format. Sorry, in horizontal format. We have solved in vertical format. ठीक है? आ गया? Then you just multiply it with the discounting factors and you will get present value of incremental cash inflows. ठीक है? Followed everyone? Now I will just solve it for year 2, and from year 3 to 5 you can solve it as homework. So for year 2 my incremental depreciation would be 155,034 if new machine was replaced minus 27,033.6. 27,033.6. So my incremental depreciation comes to 155,034 minus 27,033.6. 128. Okay? This is my incremental depreciation. I will subtract that 128 from incremental NPBDT. Another simple way is just you keep on reducing 20%. You just keep on reducing 20% to get incremental depreciation. So for year 3, my incremental depreciation would be 128 minus 20%, which comes to 102,400. You just keep on subtracting 20%. इसमें से again minus 20%. So 102,400 minus 20% would be 81, 920. And for year 5, it would be 65, 536. Okay? You just keep on subtracting. So 390 minus 128. I hope now you can complete this table. Now it is very simple. 262 less 30%. 183, 400. 183, 400 plus 128 plus 128 comes to 311, 400. So can you see cash inflows, incremental cash inflows for year 2 is 311, 400, and you just then multiply it with the discounting factors to get present value of cash inflows. Okay? So you can complete this table. Huh? You can complete this table as homework. So एक साल का incremental depreciation आ गया. Then for every year you just need to subtract it by 20%, which is the rate of WDV depreciation. ठीक है? Any doubts in today's session? I think in today's session we covered many unique points that can be asked in the exam. I hope all such unique points are clear to you all. Any doubts, students? I'm waiting for your response. Any queries? Any doubts in today's session? So with this, we complete the revisionary lecture for capital budgeting. See, it is not on me, Shravani, that institute, ICAI, sets the timetable for revisionary lectures. So you can put a request to the concerned person of FM team, and if they can set revisionary lecture, I don't mind taking that. Okay? So thank you all. It was nice conducting session with you all. Have a good day. Yes, done.